evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And boy, what a day today was. It is Monday, and it is the 4th of October, 2021 at 6:20 p.m. I didn't know what to watch first. Woke up this morning, Joe Biden's given our President Biden, I don't mean any disrespect, held this news conference. He took questions. Let's give the man credit. Answered them as best as he could, and I don't mean that facetious. Blaming, though, the Republicans for all the malaise that we're in. We can't get a debt ceiling. Now, let me think this. I wear a size 10 shoe. I'll take it off. I'll take off my right one. I'm going to give it from President Trump to Joe Biden. I hope you're a 10. You put it on. Now, you're getting blamed for everything. Both go back and forth. We've been here. We've seen this show. The parties hate each other. There's no working together. I've never seen it this bad. Mitch McConnell doesn't even want any Republican to vote for this. So what he basically is saying is, should we run up to the debt ceiling and have a problem? That'd be a stupid move. Stupid. Mitch, no. If they want to take this on themselves, and the president said they'll own it. They'll own the debt ceiling. Give them to December. Give yourself time to work it out. Don't make the credit markets think we all look stupid and all because of your politics. How's that? So many of you think I don't criticize both parties. You are so wrong. That's what I think should be done. And at the end of the day, if some sanity comes into this, that'll be it. There's zero chance you're getting a $3.5 trillion package on the reconstruction bill. Zero. I want to make that clear. Zero on both hands. OCO, as she's called, her 5-year gimmick. Let's give some of this stuff 5 years. It's not counted in the plan. I guess, OCO, you think we're all idiots. That isn't going to happen either. There's somewhere in there a compromise. I don't know what it is. Maybe. The word is maybe. There may not be one. You may not end up with an infrastructure bill, and you may not end up with a reconstruction bill until midterms are over. That's a very big possibility. We then look at what's going on with energy prices, which are taxing the heck out of all of us. Brent crude oil, now it's up to $81. WTI crude oil, nearly $78. We're not adding enough rigs, are we? So I don't know what our own oil fields are doing, but we have a president that's against the energy there. You know that. He knows that. The shale producers know it, and the shale producers are looking at this. Their balance sheets have to look phenomenal at this point. If they don't, there's something real wrong. They're not drilling many of them. They're working off wells that were there. The expenses aren't that great. And what do they have? They have energy prices. Remember, we were negative $40 6 months ago. So now we're positive 77. I want to bring up one other thing, and then we'll do the charts. Do you remember when we went to negative crude oil? And I was watching certain airlines, they'll go unnamed, that were hedging. And they said, no, we're not going to do that anymore. What a stupid move. Not every hedge works. The idea of a hedge is it blends in so that you don't get spikes one way or the other in an environment called your business. And you're trying to keep it on, be it a quarterly, a yearly, however your hedges are placed. To not hedge means that you have given up the ability that you could have locked in $40 oil, $30, $50, $60. Now you're looking at $80 and you're crying. Folks, there's a reason it's a hedge. A hedge means you're not making money on the hedge. It's a protection. It's insurance for your business. Does that make any sense to you? You now know what your cost is and you can run your business. All of a sudden waking up, and what if this goes to $100 in 3 days? Then what happens? I'm not saying it will. Bothers me a lot. Okay, one other thing while I'm on it. Wednesday, live webinar, 12:30 p.m. Central Time. Now, I had messages from some of you. I keep saying, oh, the icons are up here and you don't see them. Take your cursor, I know how difficult it is, slide it, and as you move up, it'll appear at any point during the video. Now, when you fill out the form, you'll see when you get back, you're going to get your user ID, your password. In that invite is my email. If you want me to cover spiders, ETFs, or stocks, tell me what you want me to do in that. Give me a moment, a day or so ahead of it now, so I can prepare those charts. I'll have all the futures charts ready to go. You're under the 18-week average on the weekly chart. What is the bias? Down. We come to the bar chart. Does this look bullish to you? Not to me. When we take a look at the chart, you've got lower highs, lower lows, sort of a stepping pattern on the swing line. I'm going to repeat again. I created this swing line. I was thinking about it. I think my son was maybe 10 or 13. I'm giving a guess, okay? It's such a long time ago. He's in his 30s at this point. And I was hoping he'd be a broker with me, and he did, and then he decided he wanted to do something else, and I applaud that. But I wanted him to be able to look at any chart, I didn't care what it was, and tell me what the trend was, what's associated with it in risk, not where the market might go. You can't do that with the swing line. And the idea here, what's the definition of a downtrend? Lower highs, lower lows. Uptrend has higher lows, higher highs, and no trend in some manner has a higher high and then a lower low. And then it can redevelop into a trend. Do we understand that? It's only 3 different ways it can happen. You look on each chart back at the day before, or the time frame is the better way. You can use these on 5-minute charts, 1-minute charts, 15, 1-hour charts. It doesn't matter the length of time. It'll plot it that way. That's how I created it. Now, we are fighting a battle at the 100-day average. I'm in agreement that the first time it hit it, it bounced much nicer than now that you've come down. That is what a lot of the analysts on TV talk about. They don't want to buy that second challenge of it because it could go down from there. And if it does, one of the potential targets is the 41.18 level, but more likely the target's going to be the lower Bollinger Band, which keeps holding the market right through there. So the combination, yes, it's called a combination of the 100-day and the lower Bollinger Band is offering us the support. That is not bullish. That is not a buy zone. It is an area to come out of, as far as I'm concerned, shorts. You're oversold, the market's down, and unlike spiders, ETFs, and stocks, 99% of the people I know are buyers of it. If they're buying an inverse spider or ETF, they're betting the market's down, but they're always buying. Do you understand what I'm getting at? That's just human nature. Futures is the opposite. That's why I love it. You can bet if the market's going up or down. I think this is now a bad bet on the downside. It doesn't mean it can't go lower. It's a bad bet right here. What about the NASDAQ? This could get very interesting and nasty. Are we trying to embed? You can't count today. We're on Tuesday already. So let's get rid of Tuesday's action for tonight. Monday action, both numbers were under 20 that make up the slow stochastic. Not so the day before. So you could have your second day, which is still very oversold, under the lower Bollinger Band. And here too, you're fighting a battle between the 100-day average and the lower Bollinger Band for support. Markets, again, in a downtrend. Dow Jones in a downtrend. This is, by the way, this line, it's not a mistake. That's the 200. That's the 100-day moving average. No, it isn't. That's 200. I am right. Here's the 100. So we had a bearish crossover, and I pointed this out to you right through here. Remember, we were talking, and I said, be careful. These things are narrowing. This was last Wednesday. On Thursday, I pointed it out. When you get that, it's often a sign when you get the 18 under the 100, the market wants to make a move down. The logical target, the lower Bollinger Band, if it's in play. It's what the market did. You got to bounce back on Friday, and you're just sinking away in there still. There's nothing bullish on these charts. You might, on a good rally, end the downtrends, but you have resistance into these averages. You have support at the Bollinger Band down to the 200-day average. The bears have control. Same in the Russell. As nice as the Russell came up the other day, and this is Friday's action, I'm looking at it going, okay, but you still got lower highs, lower lows. And if you take a look at what the market did, this was Thursday. The market now for Friday. Remember, on Friday, I'm not giving you the daily reviews. I go to my weekly chart, so you didn't see this. If this gives ground, then I'm looking for the lower Bollinger Band. I got what I wanted, and the market turns around on a rally. But you're back into resistance, where the pros are on Friday probably selling short between the 18 and the 100-day average with a straight stop over this day's high of 2251.50 would be the number. Why? Because you still have the lower highs, lower lows. But what else? When you look at this market, you have an outside day down. If you take that out, and you generally don't have an outside day down and then get an outside day up, and that's what happened here. The market should fail and fall back, and that's exactly, you tell me what's going on right now. That's what I'm seeing in the chart action. In the VIX, I think that the bears, I'm praying they got out here. I've mentioned it in my morning subscriber video for 2 days running. I did it both on Thursday and Friday. When the market kept there and away, it fell back and it let the traders out. I think the pros went short, as you know, right up into the upper Bollinger Band and tried to cover there. That's what I think they did. And right now, you got close enough, you can do anything. The trend is up, not down. An uptrend in the VIX, the higher it goes, typically the lower the spiders, the ETFs that cover these indexes, and the futures go with it. In the 30-year bond, all you did off this big break is rally back up to the 100-day average. Now, this 100-day average hasn't been hit in a very, very long time. I am surprised it's not offering better support than it is. What is the trend of the market with today's action? You had an outside day down. So you've got lower highs, lower lows. If today's high, and I am talking that high of 160.20 is taken out, I think the pros will buy the market, straight stop under the low of today, and that the range is big. Don't get me wrong; it's almost it's over $1,000 risk. Looking to see if they can get to the 18-day average of closes. The other bet is the market's going to stall here, but it's oversold. I don't see an edge in traders going short. Let's talk about this. What's the first thing you see? Pretend I'm in your classroom. Come on, John. What do you see here? Do you not have the ability of that 18 to get under the 100 again? That could be another bearish crossover on this chart. So this bounce is nice, but I don't see anything friendly. I think the pros are going to probe this market if they can get it away from being oversold. You can't have either of the numbers under 30 under my rule to not be oversold. I wouldn't want the market then back over that, and you're still looking for lower prices. In the dollar index, if you looked at the weekly chart, you'd understand this trade. I thought the market could be stronger for 1 day and punch through it. I was wrong. In fact, I've been wrong a lot in the past, but I've been dollar-wise, not big losses, thank God. And I told traders, I said, if it's not good, we got to get out. That was this morning. $100 risk gone. And look at how ugly this chart is. When it reopens, it's going to look uglier. I'm not liking what I'm saying. You're losing the embedded reading. When's the only time you can get back the embedded reading? There's two ways. When you lose it, the very next opening of the market within, say, 30 minutes has to be up. If it's not, you don't have it. Don't get me wrong. By the end of the day, it could be there. Play the high percentage trades. Then you got to rebuild 3 days in a row of over 20, over 80, both numbers, or under 20. This chart's in trouble right here. That doesn't mean it's long-term bearish, probably no more than a correction. And you're getting the flip-flop potential here. Now, look at where you're at. I'm going to take you to this market. It's still embedded. It's still bearish. I thought this market would flip-flop the way the dollar did. It didn't. And because it's still bearish, lower highs, lower lows embedded, until you lose that red line over 21 on a close, I think that the pros are selling this market short, looking for the lower Bollinger Band. British pound, once the market, watch this, loses its reading, the embedded reading, has it here, you lose it here today. I'm looking for the 18-day average right now. So we'll see if it gets up there or not. Now you're back into oversold territory and you're not embedded anymore. Bitcoin, you came down, challenged the 100-day average of closes with the lower Bollinger Band. You hit them both over here. That was the game. What do I teach in my enhanced Bollinger Band course? This is classic. Go on our website, look under education, see about that course. You want to learn and see what I talk about in that. Brent versus WTI crude. The differential's going crazy. Now, OPEC met today, and OPEC did what I wrote last night. You know, I write 2 reports a day for my full research people. And on that research, I said, I'm OPEC. I'm Russia. Why am I giving in? $70 barrel? They can afford it. China's got money. America's got money. Europe's got money. We need the money. They're going green. They don't want to buy our fuel down the road. We told them we'd increase 400,000 barrels a day. That's what we're going to give them. And that's what they did. They'll meet in November. Now, if they meet in November, can they instantly increase the production? Not the way they work. That would possibly be a December increase if they do it, but they're buying time. You know what their excuse was? Not that the prices are so high that the Americans and everybody else in the world can't afford their oil. It's that, there could be another outbreak of COVID and we want to be in a good position because that could hurt everything again. So they're taxing the world at our expense, and our green governments are allowing this. Okay. I can't talk anti-green. I understand climate change. We all see it. Not much I can say. But when you look at this, you have an embedded reading. That's the most bullish reading I know. So on pullbacks, until the red line closes under 79, I think the pros are doing just what we say in there. And that's what I've been telling my morning subscriber videos in both. My ETF spiders in this. Heating oil, powerhouse. I'm not interested in gasoline right here. Why? The driving season's not going to do us any good at this point. It's going to be natural gas, heating oil, and crude oil that you got to watch. That doesn't mean that there's not a play here, but I'm not as excited. This has got me excited. Nat gas. Nat gas has gone up 30% in Europe in 6 months. Where do you think it's going? I think it's doubling. All you need is cold weather. That's it. The wild card is cold weather. Do you want to bet that Mother Nature doesn't give you something normal? Okay? I do understand that we're getting warmer. I see it. You see it. The storms, we see it. Denying that, maybe there's some science behind your denial, but it's getting warmer. Whether this is our fault, Mother Nature cleaning a planet, whatever. But if you get if you get a hard winter, cold winter, you don't need a lot of snow, by the way. Nat gas is going to be in such demand, you got to be careful and watch that. So I want to remind you, we're going to have the webinar. The idea is I want you to join us all. It's easy to do so. I start at 12:30 p.m., but I open the webinar at 12:15 so you can write me any questions. It is not enough time when I get in a lot of people, and I do. If I had everybody's question and you think I can create all the spider ETF charts, I can't. Futures, yes, there's only X amount of futures contracts. It's the months that change, but not the rest. Spiders, ETFs, and stocks, I'm in thousands. How am I going to create all those charts? All I ask is you help me out. When you register by moving your cursor up there, simply, after you register, you'll get your invite from us. That's your registration and everything, how to get in. It has my email address. Write me with what you want me to cover. I'll cover it. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.